Hey, what's up? It's Nathan here with thebtccourse.com, and in this video I want to talk about whether Bitcoin is a pyramid or Ponzi scheme. So let's go ahead and just get straight into it. So I want to start off by defining Bitcoin first because there's more to it than just that token price that you see. So Bitcoin is two parts. We have the network, which is an open source, decentralized, immutable, permissionless global monetary system that anyone, anywhere can verify and interact with. So no one controls it, and anybody, anywhere can go ahead and access the Bitcoin network, and we'll call this the utility. So this is the utility that the Bitcoin network provides us. And then there's the asset. So this is a coin that travels along the network and can go up or down in value relative to another currency, i.e. the dollar. So maybe Bitcoin is worth, $30,000, maybe it's $60,000, maybe it's $15,000. Like it can go up and down in value relative to the US dollar or another currency. And we call that value right there the monetary premium. So we have the utility and the monetary premium. Now, obviously, the two parts are interconnected, right? So the more people that hold the asset, the more the price of the asset increases. Makes sense, right? Supply versus demand. So if demand is high, well then the price of the asset will go up. And also the more people that hold the asset, then the larger and more utility the network has, as there's more people to interact with on the network, right? So if everybody has Bitcoin, well then we're all participating on the network, and the network is massive and the network effects are massive, right? Now, additionally, the higher the asset price, the more miners are incentivized to mine and secure the network. The more secure the network, the better it serves as a utility. So, price goes up, more miners, more secure, a more valuable utility. So, everything goes hand in hand. And so, basically, any dollar value greater than the value of the network is considered the monetary premium. So, there is a bullish case to be made that Bitcoin ultimately becomes money, in which case the monetary premium can go up forever. But we're not quite there yet, as much as I wish that we were. So it's up to you to decide how much to value the network, so the utility is worth, and the probability that the asset, the monetary premium, will go up forever. So that is the value that you're trying to determine for yourself. Now, right now, the market values the utility and monetary premium at around $30,000 per coin. Now, why am I saying all this stuff? Well, because I want to compare Bitcoin to gold and other precious metals, diamonds, fine art, prime real estate, etc. And that's because these are other types of investments that do not produce a cash flow on their own. However, they have both a utility and a monetary premium. So Bitcoin falls into the same category of investments is what I'm trying to say. So let's look at this. So gold right here. We have electronics, industry, so manufacturing and dental. So this is the utility side of gold. And then we have jewelry, which is kind of a utility and an investment. And then we have people just buying and holding gold as an investment, as an inflation hedge, right? Diamonds, we have them being used in industry or manufacturing, and then they're also being used as jewelry, which is kind of a combination between a utility and a investment or monetary premium, whatever you want to call it. We have fine art. So the utility there is to basically, decorate your walls. And then, of course, people are investing in fine art, spending millions of dollars on this fine art in order to kind of keep their purchasing power. And, of course, no artwork is actually worth $30 million, right? It's just a canvas with paint thrown on it. But people are willing to pay $30 million because of that monetary premium and investment status. Now, prime real estate is the same type of thing. So, houses along the beach. No one needs to live on the beach, but, of course, people want to. So, prime real estate, of course, the utility is the place to live, but ultimately, it's an investment. They're hoping that this place goes up in value over time. And so, like I already said, Bitcoin is in the same class as the above sectors that don't produce a cash flow, but that have both a utility and that monetary premium. So would you consider any of those sectors to be Ponzi schemes? Because I do not. And neither does the market because they're all investable assets. But to take this video a little further, let's take a look at the definition of a Ponzi scheme straight from investor.gov. So this is the government official definition of a Ponzi scheme, and I just copied and pasted it right here in the document so it's all in one place. But if you want to go to the website, you can definitely do that and make sure that I copied and pasted the definition correctly. So a Ponzi scheme is an investment fraud that pays existing investors with funds collected from new investors. Ponzi scheme organizers often promise to invest your money and generate high returns with little or no risk. But in many Ponzi schemes, the fraudsters do not invest the money. Instead, they use it to pay those who invested earlier and may keep some for themselves. And then I have a comment over here. Well, I want to address this paragraph. So when you buy Bitcoin, you're buying it from someone else. Now that seller then is no longer an investor in Bitcoin. So funds aren't going from you and flowing upstream. Like the person that sells you their Bitcoin, like they're no longer an investor. They no longer have anything to gain from Bitcoin appreciating in price. Now that's not to say that there might not be organizers promising you returns for investing in Bitcoin. So these people may be running Ponzi schemes like BitConnect, which was a massive billion-dollar Ponzi scheme focused around Bitcoin. So moral of the story is to buy your Bitcoin from a credible exchange and self-custody it, and then you don't have to worry about being schemed by any sleazy organizers or anything like that. Like Bitcoin is just an asset. It does not promise you any returns or anything like that. Like we already discussed, it has that utility, which is the network, that lets you send value across borders 24/7, 365 without an intermediary. And that's what Bitcoin does. Alrighty, on to this second paragraph now. With little or no legitimate earnings, Ponzi schemes require a constant flow of new money to survive. When it becomes hard to recruit new investors, or when large numbers of existing investors cash out, these schemes tend to collapse. And I have a comment here as well. So like I said above, Bitcoin does not produce a cash flow. There are no earnings. It has a utility and monetary premium like gold, diamonds, fine art, and prime real estate. And since there aren't any earnings, no one needs to be paid with funds from new buyers. They're simply holding an asset, like I was already saying. So cash flow is not a thing someone considers when buying Bitcoin. Sure, they're hoping people value the utility more and the monetary premium goes up, but that's different than investing for cash flow. And let's come back over here. And so this Ponzi scheme page mentions a few more red flags that I want to cover real quick. So back over here. So one of the red flags is high returns with little or no risk. Now you have to figure this out for yourself. I think there is the potential for high returns with little or no long-term risk, but that's because I've done my research. I've consumed thousands of hours of content around Bitcoin, and I feel like I really understand this asset. But note that I underlined this long-term word up here because I think in the short term, investing in Bitcoin is incredibly risky, as the dollar value can be like a roller coaster ride. Now, another red flag is overly consistent returns. And like I was saying, have you seen Bitcoin? Like, yeah, maybe it shoots up 400%, drops 95%, shoots up, down, and I don't know how you can consider that consistent returns. Now, unregistered investments. So Bitcoin is a commodity. So we have it over here listed on the CFTC website. And we see right here, is Bitcoin a commodity? Yes, virtual currencies such as Bitcoin have been determined to be commodities under the Commodity Exchange Act, CEA. So there we have it on the cftc.gov website that it's a commodity, not a security. So you don't register commodities because it's like a piece of gold. Like, are you registering a piece of gold with the SEC? No, it's a rock, right? And you can kind of think of Bitcoin as a similar thing as a chunk of gold. Now, unlicensed sellers. So I don't really know how to apply this to Bitcoin, as I don't believe you need a license to sell Bitcoin. And if you self-custody, I don't see why it matters. Like, if you're able to buy the Bitcoin and take ownership of it, then it shouldn't really matter, where it's stored. It's not like it's a stock where you need to leave it with a broker. Additionally, there are peer-to-peer marketplaces where you can buy and sell Bitcoin amongst your peers. And you can even mine Bitcoin and not buy it from anyone. Okay, so real quick, I decided to check out the exchange that I use for buying Bitcoin, which is River here, and see if they have licenses or anything like that. And we see right here, they have a page dedicated to all the licenses that they have. So it does seem as though Bitcoin exchanges do possibly go through some sort of registration or licensing process. And you can see that River right here has a bunch of them. So there we go. And the next red flag is secretive, complex strategies, and there is none of that with Bitcoin. Like, it is an open source software. You can see the monetary policy like right there in the white paper. Like, there's nothing secretive or hidden or anything like that about Bitcoin's monetary policy. And now issues with paperwork. So there is no paperwork, as it's not a business, it's a commodity. So there's no fishy business going on with Bitcoin. It's not like the CEO didn't file their paperwork correctly or something like that. Difficulty receiving payments. So you can send and receive Bitcoin to anyone, anywhere in the world. And this should say 24/7, 365 without having a bank account, permission, or any oversight whatsoever. So there's no difficulty, receiving payments. So in summary, Bitcoin is similar to gold and other precious metals, diamonds, fine art, and prime real estate. So if those aren't Ponzi schemes, like, why would Bitcoin be a Ponzi scheme? And if we take a step further and look at the definition of a Ponzi scheme, like, Bitcoin doesn't match the description. But of course, that's not to say there aren't businesses running Ponzi schemes and promoting Bitcoin, but Bitcoin itself is not a Ponzi. And of course, if you want more details, I have a free website dedicated to Bitcoin training and educational content. So I have information on orange pilling yourself, Bitcoin basics, how and where to buy Bitcoin, software wallets, hardware wallets, multi-sig wallets, Lightning Network, miscellaneous Bitcoin tutorials, and Nostr. And of course, there are links to everything down in the description down below, and I hope you have a great rest of the day.